So I am a venture capitalist that we do have this double bottom line strategy to both bring financial returns and social returns. And it's been a very wild ride and something that is growing. And I'm going to talk to you a little bit about that in the context of the next administration's priorities. I do just want to, it was a fascinating panel before lunch. The field is so fast moving. I just want to correct a couple of perhaps misperceptions that came out of that panel. One is about Ivanpah and BrightSource, and this is a good example of the role of venture capitalists. Actually, neither Andy nor Michael were right there. The people that first financed Ivanpah were venture capitalists, and we were one of them. I have to say, it's not our most successful investment. But I'm very proud of Ivanpah and the role that it's played in bringing large-scale solar thermal power. It's probably going to be developed more in other countries than in Southern California at this rate, but it's played a critical role. And that's the role of venture capital. We invested in that company before PG&E ever showed up. We did not have a signed PPA, and so that's really something that is a strength of our economy and of our society, is that we do have crazy people like me that are willing to do that kind of thing with very little of a file to refer to. The other misconception, which is really good news, is that while it is true that rooftop solar started as something accessible only to the more wealthy part of our population, the good news is that through the investment tax credit and the ability of innovative lease financing and now loan financing, rooftop solar is actually accessible to a much broader demographic in our country than ever before. And in fact, in California, if you look at, I'm on the board of Solar City, if you look at the fastest growing demographic for Solar City and also Sunrun, which represent almost half the market, so it's a good proxy. The fastest growing segment is in the Central Valley and in homes that are median income or below. So this is not a product for the rich. It used to be, but as with all innovations, you go down that cost curve, you scale, you develop, in this case, financing innovation, and you democratize access to clean energy. And so I think that it's important for us to understand we have some successes under our belt that do address the broader issues around income inequality, because obviously lower income folks in the Central Valley have high air conditioning loads, high electricity bills, and so anything we can do to help with that is going to have a huge impact. So moving on to the agenda for the next president, just want to give a little bit of a backdrop, because we've been at this now since about 2003, so we've got some good data. I want to first and foremost debunk the myth that support for clean energy investing is disappearing. You read a lot about this. In fact, it's growing. It had we had some tough times in that 2011 time period, but globally, we're on a growth trajectory, and it is a global market. We have tiny little companies. We have investors from South Africa, from Kazakhstan. We have a French oil company and a Series A microgrid company. This is the good news. We've got strategics from all over the world coming to fund these companies, in addition to the emergence of sophisticated venture capitalists, later stage investors, and family offices, which I'll talk about in a minute. And where are those market opportunities? They have evolved. I mean, we've been at this, as I say, since the early 2000s, when it was solar and electric vehicles and different kinds of wind. But look at the way the opportunity set has expanded. And we wouldn't make, as a venture capitalist, we wouldn't make an investment in an electric car anymore. I mean, we've kind of been there, done that, worked out well, but there's a whole lot of opportunity to green the grid that will supply electricity to our vehicle fleet going forward. There's microgrid development, which is possible because of the advances in storage technology combined with demand response software and renewable energy. We couldn't have invested in those kinds of companies even a few years ago. I know there was some talk about the 1.3 billion people that don't have access to electricity, how are we going to fix that? Well, people like me are investing in companies that are going to fix that. And guess what? Those efforts are informed by the US venture-backed companies like Sunline, like SolarCity, that figured out how to drive down costs. And now we're taking that to sub-Saharan Africa, to Tanzania, to Rwanda, to Uganda, and creating low-cost solar and storage with efficient lighting that will allow people in rural Tanzania and other countries to get electricity, clean electricity, for less than they pay for kerosene, which of course is a bad environmental actor. So again, this is an investment we would never have made even 5 years ago, and we couldn't have made it because the costs hadn't come down enough. But all the learnings that we put into and derived from investing in US solar are now going to address the problem of poverty linked to lack of access to electricity. And then finally, just one other example of a deal now that you can do that you couldn't do a few years ago. That relates to agriculture. Huge carbon producing industry, fundamental to our survival on this planet. More people are going to need more food. And yet, what hasn't been possible until today, we invest in a company called Farmers Business Network that brings big data to bear on farmers' decision makings. It's not surprising that even though farmers have collected data on their tractors for many years, they haven't really had access to it. It's always gone to their vendors. So not surprisingly, they water too much. They use too much fertilizer. They plant too many seeds per row. They use too many chemicals. They don't have to do that in order to have the yields that they need to stay on their farm. And now, because of big data and innovation, you are able to bring that information to allow farmers to network their data, see what best performing practices are, and make a better living and be able to stay on their farms. So these innovations are allowing sustainability investing to go far beyond just the power plant and the rooftop into some of the most important sectors, industrial and agricultural sectors of our age. So this chart just really want to sum up for you where we've been over the past 10 years. And basically, this shows for the past 3 years, the performance of a clean energy index, a NASDAQ index, and SolarCity and Tesla, which are really the first iconic replacements for 20th century fossil companies. I mean, these are the two big companies that are taking some of the mind share away from their 20th century equivalents. There'll be more, but these are ones that we're very intimately familiar with. And you can see that it's been a high beta ride, but a very successful ride over the past 3 years. And obviously, venture investors that were in before that were able to derive very successful returns. What happened, though, in the 2006 to 2008 timeframe is that there were a lot of tourists in the market that had come off of a dot-com demise and decided to go into clean tech. Too much money chasing lower quality deals, and so you kind of got what you would expect. You got a lot of failed investments, and so that was something that took a while to recover from. There was an overreaction, as there often is, between 2008 and 2012. It was very difficult to fund anything in this sector. There were political issues, of course, that came through that period that made it even worse in terms of the headwinds. But where we are now, ever since about January 2013, we're right-sizing this investment sector, and we're getting, as I mentioned, more international participation, more strategics, more family offices, and the quality of our entrepreneurs is going up all the time. We're investing in second time around entrepreneurs, which is always a healthy signal. And this is really, while we could always use a few more players, you can get deals done now, and the good news is that we don't have stratospheric valuations in this sector like we do in some of our tech deals, so you can get good value. And so you need these iconic companies to grow a sector, but I just want to call your attention to this little Nextracker line on the bottom. You also need just blocking and tackling companies. Nextracker is a company that builds tracking systems so that you can get more profitable solar farms because the panels follow the sun. it's not a moonshot, as was referenced earlier, although I think that's kind of 20th century. I think we should be talking about Mars shots. We're also a SpaceX investor, so full disclosure. But anyway, it's a good sound improvement that improves the profitability of solar farms. And it's not famous. It ended up being acquired by Flextronics, a big outsourced manufacturing company. But what my point is that in 18 months, that company went from, because of the time that it was created, no one valued it, maybe it was worth, I don't know, 10 million when it was founded. 18 months later, it was sold for 330 million. I mean, I challenge any of you to not like an investment like that. And yet, we don't hear about those success stories as much as we hear about all of the failures in the market. And so I think part of our narrative really has to be, and in my recommendations in a couple of minutes, I'll argue that we need to celebrate and lift up some of these clean tech stories. I can't be in the Paul Brest Hall without talking about impact investing. I know Paul isn't here, but he's one of the leading thought participants in impact investing, which is the field we're in and we helped to create. I don't always agree with Paul, but I really respect the intellectual rigor he brings to our field. And so I'm not going to spend a lot of time on this, you can look at it later, but impact investing is super important to clean energy investing because it's a field that was nowhere 12 years ago. The top part of this chart is really the evolution of the field, and the bottom part is sort of evolution of our firm as an impact investor. And in the early days, it was only Community Reinvestment Act banks that would invest in this kind of stuff, and foundations through program-related investments. And so it was slim pickings indeed, very hard to raise funds. Today, you've got BlackRock, Goldman Sachs, Morgan Stanley, Bain Capital. I mean, everyone is into impact investing. And that's good news indeed for clean tech and sustainability investing, because impact investors, they want to make money, but they want to make social, environmental, and economic progress as well. And so what you're able to do is bring in a whole new group of investors to the sustainability scene. What I call it is sustainability is return candy for impact investors, because you can get the financial return, you check that box, but impact investors want a lot of things. And this is just an example of two companies. Many impact investors want to do something that is avoiding excess carbon. A lot of impact investors want to create quality jobs. Look at the job creation numbers of Tesla on the left and SolarCity on the right. Stunning. I mean, our tech companies don't create nearly as many job opportunities and a much more diverse set of employees than you'll get in tech companies. Policy engagement, these companies and their similar cohorts are helping define the policy, working with people like Michael Picker and Stephen Chu, really getting policy for the next century. Manufacturing, a lot of impact investors want jobs to stay here, not go offshore. The fact that the Model S is built a few miles from here, that didn't happen by accident. That was intentional. That took a lot of work. Impact investors like doing that kind of thing. In the case of Tesla, impact investors like that people love their cars, and so an electric vehicle is the Trojan horse for increasing energy literacy. Once you have an electric car, you begin to wonder, well, where does my electricity come from? And then often there's a correlation that we see often where people end up getting solar or buying green energy. And then finally, democratizing access to clean energy is a huge priority for impact investors. And so these kinds of companies allow investors to make that social decision to start with an expensive product like solar before you could have a lease, like the Roadster or the Model S, and then over the years, through scale, through innovation, derive cheaper, better, faster products that are more accessible to a broader array of the public. So this is very, very important because this is the way that we're going to scale investment. And just as an example, that Africa company that I told you about, Off-Grid Electric, we were able, because of impact investors, foundations, and high net worth family offices, to do a loan fund to support the building of solar and storage in rural areas of Tanzania at commercial rates. That's just unheard of. I mean, it was hard enough to get US rooftops financed a few years ago. And the fact that impact investors lined up to create a $45 million fund that supports about 1 million installations in sub-Saharan Africa is a huge milestone that is a tipping point for all of us. And so this is why we're very bullish about our ability to continue investing, and other firms like us. Our last fund, because of impact investors, was oversubscribed, and there's plenty of opportunity for other firms to start and ride this wave. So in my last comments, I just want to pay attention to some of the recommendations for an administration to address some of the problems we're seeing. And really capitalize on our ability to grow a clean energy economy. So this is a chart of the per capita solar PV capacity by state, 2015 numbers. And the reason I show this is because everyone here is probably aware of the battles that are going on in some states. It's not at all a coincidence that the early adopters, if you will, in solar, the top 4 states, Nevada, Hawaii, Arizona, and California, are also where some of the most visible policy discussions and in some place battles have taken place. I mean, when you don't have a lot of solar, you don't have a lot of fights about it. And so what we need to do is, what the federal government can help to do is make sure, because when you see those top 4 states, only one of them, California, is one of the largest states in the union. California won, Texas, Florida, New York. So as a policy person, I'm concerned that 3 of our biggest states aren't up there. We don't have a lot of time. We've got to lower the carbon of our electricity in the states where a lot of people live. As an investor, I'm very bullish because I can see that those states are ripe for more solar growth. And so there's going to be while you heard a lot about these 4 states over the past 10 years, you're going to hear about some of these other big states if we can get the policymakers to help us avoid some of the mistakes that have been made in some of these skirmishes that we're seeing. And the fact that in some states like Nevada and Arizona, you're taking net metering decisions to the ballot box. That's a sea change. This is something that really has never happened before. It used to be very esoteric and done in regulatory circles. So what I feel that the administration can do is help these other states share best practices, get a more diverse set of decision makers around the table so that we can move these lower penetration states up. And I mean, especially a state like Florida, which is the 3rd largest state, and it is the Sunshine State, by the way, there should be, they shouldn't be down where they are. And so I feel that the federal government and the White House in particular can help here. And even in Nevada during the primary season, the 2 Democratic candidates got involved. They weighed in on the Nevada net metering controversy. The good news is that it's looking like that will be resolved in the very near future at some level. We're not able to say exactly how, but some of the more extreme aspects of that decision will likely be turned around because of politics, not because of science, not because of engineering, but because the jobs, the public choice momentum is allowing for a political solution to what has traditionally been a regulatory area. So just in closing, a few of the to-dos that I would give, and Dan has been working on so much, and I'm going to let him talk about a lot of very effective approaches to financing. As a practitioner, I'd like to just ask that the next administration really do more of the convening and research function for giving a voice to the clean energy economy. We all love Elon Musk. I mean, he's changed our firm's performance in very dramatic ways, but I got to tell you, the entrepreneurs we see, they're not just Elon Musk. They look like America. They're black, they're white, they're female, they're male, they're rural, they're urban, and they should be celebrated, and they're making a difference. And we don't see that. We need to really have have a way of educating our population about that. We also need, this report that we talked about a few minutes ago, what would Jefferson do? Really happy to do that, but I do have a day job that's a pretty serious one, and I don't think I should be the one that has to write these reports. I think that the government and universities should dig in, and I have a whole list of reports I would write if I didn't have my day job that would be very, very useful in paving our path forward. So I'd like to suggest that we really get the government working with universities to do research that really helps, that matters. One example would be data transparency. How do we get the data from utilities to allow data companies, new entrants, consumers to really know what the true value of a particular energy paradigm is? A lot of that is locked up or it's redacted. It's very hard to access data, and if you don't have data to navigate developing your system, you're not going to really have the optimized approach. I also I'd just like to speak to the coal to green. This is something I will sign up. Whoever wins the presidential race, this is such a no-brainer. We have in our companies, we have the daughter of a coal miner and the sister of coal miners. She's one of our best salespeople in Utah. And she wants more of her friends and siblings to move into the renewable industry. We can do this. I know that the industry itself is very interested in going into coal belt states and developing workforce training, developing renewable developments in areas that are going to be transitioning out of coal. So I think that's really important to honor the folks that built our energy economy in the 20th century through coal and give them a ticket to the 21st century and the prosperity that they can have through that transition. And then finally, of course, the tax code. We do need to level the playing field with incumbents, with 20th century fossil practices, with the new entrants. Obviously, I agree with George Shultz and many others that a price on carbon would be ideal. I realize the political difficulties of that, but I think we've got to continue to work on it. In the meantime, the tax credits that helped us with EVs and solar and wind could help us with storage. I mean, we could have a storage tax credit that would help drive down the cost curve successfully the way we've seen in the past. I'm a beneficiary of CRA. My firm wouldn't exist if it hadn't been for banks that invested in us when no one else would. In our first fund, over 50% of our money came from CRA banks, and now we get less than 5%. The Volcker rule, the inability to qualify for Community Reinvestment Act credits for investing in low-income solar is really something that should be switched, because it's a good source of money and it's place-based. It really does make sure that investment dollars are placed in areas that really need them. And finally, if we can't get that price on carbon, we should continue to figure out tax approaches to help to level the playing field. And just as I get a benefit and you get a benefit when you make an investment that you hold for a long time, you get a lower tax rate and a capital gains tax. How about deconstructing that a bit in a carbonless gains tax? Be rewarded for investments that do really reduce the overall carbon load and help us tackle the growing problem of global warming. So those are just a few ideas to get people thinking, and now I'm going to turn it over to Dan to amplify and expand. Thank you very much.